Hello, my name's Helen and today I'm going to be talking about what's happening with rapeseed prices. Last week, UK delivered rapeseed to Liverpool and Erith in September was reported just under £319 per tonne. While down from the previous week, these prices are still over £50 per tonne more than spot prices a year ago. This follows what's been going on with European rapeseed prices, which have been supported since early summer. This was first as concerns about and then the extent of crop issues in the European rapeseed crop emerged. Currently, EU rapeseed production is estimated at 20 million tonnes, the lowest since 2012. Reduced output in the EU, along with a much smaller Ukrainian crop due to dry weather restricting plantings last autumn, is expected to result in the world's smallest rapeseed crop for 8 years by analytics firm Oilseeds. It's worth noting that this is despite expectations for higher production in some of the other major exporters, principally Canada and Australia. Due to the smaller European crop, European rapeseed prices have resisted the downward pull of the soyabean market, so far at least. But rapeseed has also been supported by what's going on in vegetable oil markets. Demand for vegetable oil is strong, but output of the dominant vegetable oil, palm oil, remains below year-ago levels due to the continuing effects of last season's El Niño event. However, as I said, rapeseed's gains have been capped by what's going on in soybean markets, and also to a lesser extent sunflower seed, where record crops of both are expected globally. Soybeans dominate the oilseeds market, accounting for around 60% of total output. And in 2016-17, this season, the USDA expects that soybean output will increase globally by around 17 million tonnes to over 330 million tonnes. A large part of this increase is down to the US, where the crop is pegged at a record 114 million tonnes, due to both an expanded area and record yields. So, nonetheless, soyabean prices have found support recently as rain has delayed early harvest progress. But it is still early days, with just 4% cut by the 18th of September, in line with typical progress for the time of year. However, once market starts to get confirmation of the US crop, attention is likely to shift south to South America, where crops are just starting to be planted now for harvest in early 2017. Production in the region is expected to recover after unfavourable weather dented 2015-16 output. These were crops that were harvested earlier this year, and it's also expected to be due to expanded out area in the region. However, there are increasing reports that the soybean area in South America may not expand as much as previously thought, and may potentially even stagnate. This is due to increased competition in maize and a drier than usual soils in Brazil and in Argentina. Uncertainty over the export tax situation is also a factor. So what does this mean? In the short term, it means an uncertain few weeks for oilseed markets as we gain more clarity on the potential size of the global soybean crop. Given the dominance of soybeans and growing demand for oilseeds, a smaller than expected crop could boost prices, while increased confidence in production numbers is likely to add pressure to the oilseeds complex as a whole. Get more on the outlook for oilseeds markets at this year's Grain Market Outlook Conference. Oilseeds and biofuels analyst Christophe Conny from Strategy Talage will be speaking there. The conference takes place on 12th of October in London. Find out more and book online at the address shown on screen.